All right, guys, what's up? We're going to be going over an option strategy for selling options as well as giving you the opportunity for unlimited upside. So, as we can see on our screen here, we have Lucid stock as an example. And Lucid stock has been doing pretty decently earlier, late 2021, when they finally released and delivered their Lucid Air, which is right now being produced and delivered to many customers on the road. So Lucid is definitely a solid contender for the electric vehicle space, and it's had quite a bit of a sell-off, as well as many of these other growth stocks. So now is good opportunity for buying this stock, especially if you are bullish on it. So this strategy, we're going to be going to options. And why are we actually doing stuff on Lucid? Gas prices are rising because of the Russia conflict. Um, and it's just causing a lot of people to kind of move towards electric vehicles. They're going to be a little more appetizing than those gasoline powered ones. So stuff like all the Ford, Nissan, all these other electric vehicle or gasoline powered vehicles are definitely going to be taking a big hit. And a lot of people are going to actually look towards electric vehicles just because it saves a lot more money on gas. So stocks like Tesla, NEO have been selling off, but they're really good opportunities to buy. Now, on the contrary, stocks like Ford or Carnival, which uses gasoline, are going to be dipping a little bit once gas and oil prices are going to rise. Some analysts think that gas is going to rise to over $5 per gallon, which is kind of insane, and it's definitely a deterrent from gasoline powered stuff. So electric vehicles are going to be making up that space. So, anyways, Lucid stock, we're going to be going to selling a put. And if you aren't familiar, selling a put basically gives you the obligation to buy stock at a lower price, and you are getting paid to do so. So we can do something like a March 25th expiration. And why I like the stock is because the premiums are very, very high, as we can see on our screen here. You could do something like a $20 cash kid put. It has a 71 chance of profit, so it's very, very good. And you're getting it at a lower cost basis if you do end up getting a sign. Now, our total credit is going to be $109, and that is our max profit. So, how can we potentially make more profit if the stock, say, goes to $30 per share? We're going to be missing out a lot of profit. So, how do we turn this 109 into something a lot more? What we're going to be doing is we're going to be buying a call option with the credit we're receiving, which is $109. So, we can go ahead and buy a call for the March 25th expiration and do something like a $26 call option. So we're still going to be receiving a credit, as we can see here, of around $18, and we are going to still be putting down a collateral of $2,000, but our profit potential is a lot higher because we have that call option, which allows us to get unlimited upside. So if we go to something like an option profit calculator and enter in our strategy here, let's go ahead and enter in Lucid. The first leg is going to be writing, aka selling, and we're going to be doing a put option for the March 25th expiration date. And we chose I believe there's a $20 strike price. And then the second leg is going to be buying, call option for March 25th, and we chose the 26 strike. So as we can see here, this is what we have for the order. And it's going to be coming out to a net credit of around $18 or so. So let's go ahead and see what we have here. And as we can see on our screen here, as Lucid stock goes higher and higher, our profit potential is definitely unlimited, as well as our max loss, which could potentially be pretty bad if the stock ends up going to zero. But our cost basis is going to be lower because we chose that $20 strike. So we're going to be getting shares at $20 each compared to the current stock price, which is $22. So let's just go ahead and take a look at the range. We can do update it all the way to $50. Say the stock goes to $50, you're pretty much doubling your money because we have that call option. That's kind of giving us a nice little upside potential. Whereas if we're just selling a regular cash trade put, our max profit is going to be $109. So that's why we're really using some of that credit and buying a call option in case the stock ends up exploding because of gasoline prices rising significantly. So we really want to capitalize on theta decay, which is the strategy we have here, as well as a potential for the stock to explode and for us to capitalize on making a lot of money. So that's about it for this strategy. Really nice strategy for selling options for unlimited upside. Thanks for watching.